Last week, bears got absolutely squeezed. The S&P 500 is above the downward sloping trend line, which is technically bullish, and they're above 403, which is also technically bullish. Are we back in a bull market? Or is this just a bull trap? How's it going, everyone? Mario here. If you're a bear, I'm pretty sure you're not doing very well. If you're a bull, I'm pretty sure you're happy. You're expecting for the new bull market to start. Well, price action wise, you're not wrong. But is this week gonna be that turnaround where the market actually pulls back? Because this week we have Jerome Powell. This week we have earnings from the big cap companies. Are these going to spook the markets, or the market's going to use these as a reasons to sell off? Let's be honest here. Most of you guys are not fully aware of what's going on in the macro environment. Even if you do, your opinion comes from the headlines which you see in Bloomberg or CNBC, or your opinion comes from what other analysts think about the economy than what you think about it on your own. This is not it. No one cares, especially if you're a trader. Looking into all these things, it's just gonna cloud your judgment when you're taking the trade, especially if you're a short-term trader or day trader. No one gives a shit about the macro as a whole. Focus on the price because that's the only thing that pays. The narratives change based upon what the price does. If CPI comes out harder than expected and the markets rally, the headlines are going to be different compared to that if the CPI comes out harder than expected and the market dumped. Let's say if Jerome Powell comes out this week, right, and he gives a 50 basis points and the market reacted in a negative way, you will see headlines something resembling like this. Oh, Jerome Powell increased interest rates by 50 basis points and the market didn't like it. And if the market rallied after the 50 basis points, you will see headlines like this. Oh, market loved the Jerome Powell going 50 basis points. There is no way for you to know if something is good or something is bad until you see the reaction from the broader markets. Let me be clear. Knowing what's happening in the macro is important. But if you're a short-term trader and your time frame on a particular trade is no more than 5 or 10 minutes or no more than one day, knowing what's going on in the macro is not going to make any difference on where you buy and where you sell. Price is what makes the major difference. There are a million ways to analyze the price, but it's all technical analysis as a whole. Knowing where the buyers step in, knowing where the sellers step in, actually makes you money, rather than you building up your own bullshit narrative into making yourself believe that, oh, the prices went up because of this happened, oh, the prices went down because of this happened. The why part doesn't matter if you're a trader. Believing in all these macro bullshits is how you exactly catch the top to go long on and exactly catch the bottom to sell shit on, because you don't know what's happening. You are not an economist. You are just someone who takes the opinion of what you saw in Bloomberg, what you saw in CNBC, and couldn't make the right opinion on your own. If that's the case, why will you focus on all these things? Focus on what you actually know. If you're good at technical analysis, focus on that. When you're investing, the macro important. Got to keep an eye out for what's happening with the economy. You got to keep an eye out on what's happening with the environment. Environment? What the fuck? Got to keep an eye out for what's happening with the economy. Got to keep an eye out for what Fed is doing. But if you're day trading and your time frame is no more than 5 minutes, it doesn't matter. Remove the noise away. Those are all noises. Focus on the charts or whatever way you use to analyze the price. That's all matters. Nothing else does. Oh, Federal Reserve don't like stock market rally and they have to clamp down. Federal Reserve mandates doesn't revolve around stock markets. They don't give a shit if stock market rallies or it tanks. The two mandates of Federal Reserve is stable prices and proper employment. That's all it is. It's just sad to see a lot of these idiots throwing out some bullshit narratives out there to all the new people. Stop listening to these advices which these idiots gave you. Oh, Mario, you're also giving an advice. Only listen to my advice. What to expect from SPY leading into this week? So we're looking at the weekly charts of SPY. As soon as we open it, we can clearly see that downward sloping trend line all the way from all-time highs. Bulls took care of it. Now, one thing about technical analysis, we are not predicting what's going to happen in the future. It's not astrology. We are only looking at these charts to give us a high probability of something to play out. This is the main reason why I don't like people when they brag about certain things if they are right. I mean, if you're right, that's good. If you're wrong, that's good as well. That's why we got risk management in place. Now, back to the charts. The weekly charts were above the trend line. One thing to note though, just because we're above a line doesn't mean we're back in a bull market. There are a lot of other factors which we need to look after as well. So leading into this week, we got a lot of binary events. By binary events, what I meant was events which can move the price one way or the other. With that being said, we're gonna omit all those binary events for now and just look at the charts and see what's the high probable scenario to play out leading into this week. Looking at the weekly charts, this is for longer time frames. You can clearly see the rejection happened in one place over and over and over again. 410.87. That's the spot where we tested it multiple times. We tested it once on 12th of September 2022. We tested it again in November 2022. We tested it again on December of 2022. Every time we tested this level, market offered a massive pullback over and over and over again to the downside. Now we're going to test it again, which will be one of the massive resistances. Now that we know the massive area of interest to the upside, the level 410.87 from the weekly charts, we are going to dive into the smaller time frame. We're going to look at the daily charts. You can clearly see we are in a secondary uptrend. I'm calling it a secondary uptrend because the market has been going up in a shorter period of time. We are going up from December of 2022 all the way from right now, but primarily we're still down all the way from the all-time highs. This is why we call it secondary uptrend when the primary trend is still to the downside. Oh Mario, they took care of the downward sloping trend line. Well, that does not mean the stock is back in an uptrend. From the weekly charts, we drew this 410.87 levels. You can see how it correlates with the daily charts as well. You can see the price rejected at the dates which I mentioned before thrice and offered a nasty pullback. Leading into this week, we're going to test it one more time. Are they going to use Powell or these earnings as an excuse to squeeze higher all the way to 416 to the upside? Or this is where we get that pullback which we were talking about in the previous sessions? One thing to note about the markets, when a bear turns bull, that's when you know the top is in. I've been seeing a lot of bears turning bulls lately, so I'm gonna be cautious as long as they're under this 410.66 to 408 zone. Oh, but Mario, we broke out of the trend line and everything is bullish. Well, I got something for you. During 2008, during 2002, during 1940s, similar types of breakouts happen from the downtrend only to result in a failure. After the failure, the market collapsed another 20% or 30% to the downside from the levels where they broke out from. With that being said, it doesn't mean that they can't push towards the all-time highs from here. Just something to keep in mind about. Oh Mario, are you bullish or are you bearish? The point is we are nearing some of the strongest resistance levels to the upside. 408 to 410 and SPY is some major area to keep an eye out for. If they do offer a pullback, this area will be a major level that they offer a pullback from. This is just a probability standpoint. If they push above 410, well, I will change my thesis and go long all the way to 416 again. But if they reject it, it's going to offer some nice shorting opportunity all the way back down to 402.88 or to that test to that AVWAP all the way at that breakout zone at around 398.50 and change. As a trader, your most important job is to protect your capital and manage the risk. Leading into this week, we have a lot of binary events, like we have Jerome Powell, we have earnings from the big cap companies. All these can move the market in either way. So this week I won't be trading at all. I'll be watching the markets from the sidelines because there is no indication of any reversals from the chart point of view, and also we are also nearing pretty strong resistance levels to the upside as well. With that being said, take high probability trades, manage the risk wisely. I'll see you guys in the next video.